This is IA Forward, your playbook for success as an independent insurance agent. Here to help you knock it out of the ballpark are your hosts, Shane Tatum and Tonya Lead.
Welcome to IA Forward. Shane, let's talk about something today that most agency owners don't love talking about, and that is accounting. This is something we really need to talk about.
Salespeople generally just do not like to mess with it. It is really kind of interesting because insurance agencies in general, whether exclusive, independent, it doesn't matter really. They're salespeople. The insurance agency owners are salespeople. They start agencies. Unless it's a really, really large agency that hires an operational or a financial background person, most of your CEOs, presidents, owners of insurance agencies are salespeople. And so this is really important because a lot of times, to be blunt about it, me included, in my early days, it's kind of the blind leading the blind. We don't necessarily have the training in the background, but then all of a sudden we have this business, and we have this business that needs accounting oversight. It needs financial management knowledge. And especially as it grows, it really needs it early on. It's a really big struggle for most independent agency owners to get their head around what's happening within the financial element of their business.
Now, if your wife was on this podcast with us, she would take this next level. This is what Julie does. She is incredible at it. For you and I talking to salespeople, let's just discuss bare minimums. What is the bare minimum foundation that an agency needs to feel in control without being an accountant?
I'm going to answer your question, but you just stirred a thought in me that I think is relevant here. I'm blessed because I live with and married to a financial manager, an accounting person. What jumped into my brain as soon as you said that and you brought Julie up is this other dad, softball coaching dad that I coached with for years. He had an older daughter and a younger daughter. He made the comment, if you know anything about softball, it's all about pitching. And it's all about, if you have a pitcher, then you're in good shape. If you don't have a pitcher, it really doesn't matter what else is going on. You can have the best lineup in the world, but if you don't have a good pitcher, you're going to struggle. He said, the best way to make sure that you have a pitcher is to put them in the car with you when you head to the game. His point was to make your daughter a pitcher. If your daughter's a pretty good pitcher, you're going to be fine because you're going to put them in the car with you when you head to the tournament. I have that blessing in business for the last 26 years. I have the opportunity to put my accounting manager in the car with me when I head to work. So if you have a spouse that has financial background, okay, start there. But in all seriousness, that's not what everybody has, and I get that. I think from the basic standpoint, you need to understand that when you write business, you need some mechanism of what are you getting paid? Like, how is the company paying you? Or how is the revenue going to be? You have to have some kind of tracking mechanism for revenue and expenses. Expenses are the most important thing long-term, but early on, especially when you're starting out, you need to understand the revenue side. I have experience with agents who went from producer to agency owner or just captive to independent. They were used to just sell, and really didn't worry about where the money was coming from and how the money was flowing. I have experience with agents doing things and not even realizing they were not getting paid commission. So they were writing business. They weren't necessarily getting paid all the commission. And it was because they didn't have knowledge of the way the carrier was functioning. This is something that happens to new agencies a lot. It actually happens quite a bit because the assumption is when I write a piece of business, we're going to use round figures like 10% commission instead of 15. When I write $1,000 policy, the assumption is that I'm going to receive $100. You might, Or that particular carrier, they may not pay commission until the money is paid to them. So if it's a pay plan, that particular carrier may pay commission on the payments that they're receiving. And so it's not automatic that you're going to know in your head, I wrote $1,000 premium, I'm going to receive $100. And so you need to have understanding of how the carriers pay commission. Is this direct bill, or is this an agency bill thing where my commission is going to come to me on the front end and I'm going to hold on to it net of paying the company what is owed to them? These different scenarios, and I don't want to get down in the weeds on that because we're going to try to stay high level. But I think first and foremost is you need to understand how to track the revenue that you're supposed to be receiving.
How many fancy pieces of software do agency owners buy thinking that it's going to make this process easier?
Yeah, it's a lot, and it's all for naught. It's all worthless in the sense of understanding it. Right now, good accounting software, whether it's QuickBooks, whether it's agency management system, built-in software, accounting modules, whatever, they're good things. I do not want to make you think that these are not good things. We use software to run our business, and it's pretty robust, and it does a fantastic job. It wasn't always that way, though. And I will tell you that a good spreadsheet, I'm sorry for all of you spreadsheet haters out there, a good spreadsheet is a good place to start. It's simple. If you're not a spreadsheet person, maybe an even better thing is a ledger book. To show my age a little bit, a little ledger book is also fine. There are a lot of salespeople that actually would be like, so I can just write it down? And you're like, yeah, you can just write it down. You can literally record what you did that day. Here's the point. There was a Inc. magazine article writer from years ago. I think he's retired now. I really appreciated something that he always talked about. This was the dawn of the internet age. I would say this was early 2000s into about 2010 or 12. He wrote this article. It was called Ask Norm, I think, or something like that. What he always talked about, and this was not insurance industry specific, this was small business specific. He said for the first 2 years, every new business owner, every new business, the books, the accounting, the bookkeeping, whatever you want to classify it as, should be done by hand in pencil on a ledger book. That was his thing. He would say that over and over again. Now, I'm not talking about people who go out and raise funding from venture capitalists or anything like that. I'm talking about your normal, average small business. You're going to start a small business. Insurance agencies are classified as that every time. It's always going to start out that way, especially if you're starting from scratch. His deal was, you need to do this by hand. And here was his point. And I know this is crazy in the age of AI, but I still think there's a resonation here that you need to understand. When you have to record something like that, when you have to write it down, you know a whole lot about what's going on in your business when you do this. And if you just took a few minutes every day to record what you did, to record your quote sales for the day, what you expect to receive from the company in the next month. If you just did that, you're going to actually learn a whole lot. And I know, but I actually did this on the side. It wasn't the official accounting. I just did this as an ownership level. I did it for about 9 months. And it was really eye-opening, like what we were doing and what we were spending, what we were selling, like what was the real dollars. Because one thing about salespeople, and I am chief of these, is we're really good at projecting our future planned success. If I do this much, if I call this many people, if I write this much business, I'm going to make this money. Yes, we're really good at that. Now, is that actually really happening? At some point, you're going to have such a good feeling about where you're at. You're going to be able to automate that. You're going to be able to then take that software that you spent money on and know how to set that software up for your best success. And what happens is, to Tonya's point, we just jump in with no foundation whatsoever. We don't really know what we're doing. We think the shiny new object software, we think it's just going to solve all our problems. We think that if we just have the software, the app, or the AI agent to do this, then all of our problems are going to go away. That's not true. The problems aren't going to go away until you sit down and truly understand what's happening in your business from a revenue, cash flow, and an expense outflow. What's coming in, what's going out.
People that are driven by relationships, by sales, by service, they are not driven by spreadsheets. Everything goes into the miscellaneous column that's not a commission. So what are the basics that our listeners need to have set up for this to work?
There's a couple of different ways that I've seen agents do this. I don't really have a preference of one way over the other. On the revenue side, we have things set up as direct bill versus agency bill versus life and health insurance. We do a very small amount of life and health insurance, but we want to see that separately. That's how we set up our income, our revenue is very, very simple. Is it agency bill revenue? Is it direct bill revenue? Is it life and health revenue? And then we have interest income, which for the longest time was non-existent. And so there's a little bit of interest income with the interest rates up now from the very simple starting point, agency bill, direct bill, life and health. Now, the financial experts, and I agree with them, the independent agency accounting experts are probably going to say, actually need to set this up as personal lines income, commercial lines income, life and health income. Our books were set up almost 40 years ago, the initial way that my dad saw the world. When I learned insurance accounting, it was mostly from him, but some of it was just like figure it out as I went. Some of it was him and the way his world worked. And then when Julie came on board, I, of course, taught her a mixture. She got a mixture of me and my dad, sometimes debating over the way it should be. That he's doing it by banker mindset. I'm doing it by insurance mindset. Don't forget, I'm a sales guy. So you have that mixture in there. I have learned through M&A discussions, looking at buying another agency. I've learned through things like valuations of how the world looks at the value of your agency, how the buyer, the real buyers, the people that buy agencies quite a bit out there look at things. And I think they're going to mostly land on wanting to understand your personal lines revenue versus your commercial lines revenue. I know you can see that in your book of business, in your management system, but that isn't always a one-for-one clarity translation to your financials. And so I personally believe that we are set up a little awkwardly, and then we would have to do a little more digging to disclose what percentage of that is commercial revenue versus personal lines revenue. And so maybe a preferred view is I would go personal lines, commercial lines, life and health, if any. If you're not life and health licensed, don't even put it there. If you're going to do some life insurance, then I would separate your life insurance out from your personal versus your commercial. Now that's the revenue side. On the expense side, you've got to have some labor cost in there. You've got to have basic utilities, E&O, like insurance for yourself. There's going to be some pretty standard expenses, but you don't have to go crazy here. You can go pretty simple. I think there's probably 8 to 10 expenses at most for a new agency starting out.
Let's talk about the expense column that drives every accountant crazy, and that is the miscellaneous column.
There's no reason to have it. I really think that it's the not knowing my business kind of answer. I don't really know. I know that I spent this money. I know that it needs to go somewhere. It's not a utility. It's not insurance. It's not labor. What is it? I promise you, an investment in a CPA relationship is important. And if you want to run a serious business, I don't care if you're a practitioner, like a law practice type setup. If you're going to be an insurance practice, it's going to be you and some CSRs, or maybe one or two other producers and a couple of CSRs. You're not going to try to build this enterprise. It doesn't matter. You still need a CPA. And the reason you need a CPA is you need tax guidance. You need tax advice. And they will answer this question for you. And the $150, $200 you spend making that phone call, sending that email, will be a well-spent expense. It really will. Because here's the thing. When we create a miscellaneous expense, chart code, whatever, when we create that, it's a blob of mess. You start using that and then you look up and it becomes one of your biggest line items, maybe after labor. And then it's like, what is that? You start pulling it and you realize that you've got trends you didn't even know. You may have bad trends that you didn't know about because you didn't classify what that expense was. A CPA relationship is going to help you here. And if you want to run a serious business, if you want to be successful, you've got to set up your financials for success, and you've got to set up a relationship with a CPA to help you do that.
There's a phrase that you use, and that is living out of your business checking account. Let's talk about those little personal charges and meals and such things that sneak onto your business credit card. Why does that matter for the day-to-day business? And really, why does it matter when it comes time to sell your agency, or if you're asking for financing to do something big with your agency? Why do those little personal expenses make a difference?
Number one, you blur that line and it makes it very difficult to actually see how healthy or unhealthy your business really is. I see a lot of agents go down this path where it's a tax thing, saving on taxes. Look, there's other ways to do that. We're back to the CPA need. There's a tax advisor need. That is not the way you save on taxes. You're setting yourself up for a potential IRS audit that will be really expensive. We live in the world of honesty wins, and that's how we run our business. There's just a functional kind of mindset here of these worlds need to be separated. There's ways to set your business up. I'm a big LLC, taxed as an S Corp. I know that may sound confusing. Limited liability company, S Corp, S Corporation, not the same thing, but it's a tax element. Back to the CPA need. I highly advise that type of structure. There is a way for you to use the proceeds of your business on a personal basis without muddying the water and blending that. I do see a lot of agency owners, small business owners in general, some of our clients. This is going to cause you a potential problem on a general liability audit if you're an auditable policy or a workers' comp audit. This could cause you some problems. There's ways to set things up. One of the principal ways is to separate those worlds. Have your personal checkbook, have your business checkbook. Don't mix those things. If you need to distribute profit cash from your business to your personal, make a distribution, do that. But don't just say, I'm going to pay that out of the business. Here's the problem with that. There's no clean trail. And so let's say that you do this for 20 years, you build a really nice business, and now you've decided you're going to retire and sell that huge asset that you've built. That is the average American, their largest asset is generally their home. As a business owner, your largest asset is generally your business and then your home. So you have this thing you've created, and then you decide you're going to sell it and can't get to a clean set of financials to show the buyer. You cost yourself, let's say that, you might sell it for, let's very simply say 2.5 times revenue. Okay. So you've got this business that's doing $1 million in commission revenue, and somebody's willing to buy it from you for $2.5 million. But they can't see the financials. They can't really see what's going on because you have all this blended stuff going on because you've mixed your books and you've got all these different things coming out of your business. And now, instead of 2.5, they can't see it. And so they're looking at your actual earnings, EBITDA, earnings before interest, taxes, depreciation, and amortization. And you now just cost yourself, because the best you can see is $1.8 million for your business. So you cost yourself $700,000. If you would have had clean books, if they would have been able to get to a clean set of financial understanding, then you get the full price, you get the dollar figure that the market rate is. Your best buyers are going to want to understand what's going on in your business. If you have this blurred thing going on, you are setting yourself up for a letdown when it comes to that point.
I don't want to get too far in the weeds because most of our listeners who have the heart of a producer are already glazing. So give me the most important things, the base level things that our business owners need to have set up, that need to be looking at: revenue per employee, EBITDA margins, just base level that they need to be looking at. And then let's talk, like, what do we need to be looking at monthly on our P&L, cash flow, those types of things?
Yeah, so KPI, key performance indicators. The first thing you have to do, let's move past the 24-month dark period. When you start up, the first 2 years are just digging, clawing, fighting, getting revenue on the books and getting to a certain size to survive. So let's level set and say we're past that 24-month, 2-year dark period. You've got some things to track. The reason I say that is because don't freak out if you're at step 0 or if you're 1 year in or even 2 years in and you're like, Shane, Tonya, I can't do this. I got to sell. I got to get revenue on the books. There's a point in time where you're going to get over that horizon. And now it's like, okay, I got to understand my business, because if I'm going to make any money at this thing, I got to know what's going on. So once we get to that point, if you're a super organized version of agency owners, then do this at baseline. But the things that you're looking at is, I think, revenue per employee. Okay. So this is something, but you have to classify yourself as one of the employees and classify your pay as a normal employee. Don't classify your pay as, I took $50,000 out of the business, or I don't have any employees and my business generated $100,000. When you reach the point of, I'm thinking about hiring my first employee, or I've got one employee and now I might need to hire a second employee, what is the metric to tell me, am I generating efficiency out of this book of business? I love revenue per employee of $100,000 and above. I love that. There's an article in Insurance Journal that we're referencing in some of this that is talking about $150,000 to $200,000 per employee. Let me say this about that article. If you go pull that up and you go, Shane, why are you saying 100,000 and they're saying 150 to 200? They're talking about more established traditional independent agencies. We're talking to our audience, which is mostly smaller startups. You got to get to that point before we can start creating some of those goals. Revenue per employee, I think that you have to understand cash flow. There's very simple cash flow tools out there, because not everything in a profit and loss statement accounts for your cash movement. There's other things, like if you borrowed money and you're making a loan payment, only the interest portion of that is part of your expenses, isn't accounted for. So you could be sitting there going, well, I'm paying $100 a month in interest, but you could be paying $600 a month in a payment. 500 of that is principal and 100 is interest expense. So you've got $500 flowing out unaccounted for on a basic profit and loss statement. That's a loan repayment. So that's going to show up in a cash flow statement it's not going to show up in a profit and loss statement. There's no magic to a cash flow statement. Google it. There are simple cash flow examples and templates out there. If you hate spreadsheets, write it down if you don't like a spreadsheet. There's a ton of cash flow statement documents, spreadsheets that you can just Google. You can put it in Chat GPT, Gemini, whatever your favorite AI tool is, and it'll spit it out for you. And then use that, plug the numbers in. Cash flow is super, super important in the early days. It's super important to understand the dollars coming in and flowing out and where they're going. I think those are two really good financial KPIs. I also like to watch my cash. So cash flow, but then my cash balance. Like I just like to pay attention. What's my cash on hand? Am I sucking everything out of the business? It's fine if you want to keep doing that. But a lot of times what happens is back to living out of your business checkbook. If you have cash in the bank and you decide you want to do something, buy a new car, buy a new house, go on vacation, a lot of small business owners look and say, well, I've got $15,000 in the bank, and take $8,000 out. Have a plan. Like set up a projected salary, a target salary, and don't be ridiculous with it. Like you have a business at zero, you're in the first 24 to 36 months. Don't set a salary of $200,000. Set a salary at 60, 50, something. Set something that is like going to pay some bills. As the money comes in, pay yourself that. And then if there's money left over at the end of the year, you can do a bonus distribution. You can do an owner distribution. It's going to help you on the tax side. Back to the CPA need. What I see and continue to preach against 4, 5, 6 years. If you have kids, you know what I'm talking about. 4 or 5 years down the road, agents have built this really successful cash generating agency book of business. We have some agencies doing this by themselves, maybe with a virtual assistant or an executive assistant. They're generating $350,000 a year. They're killing it. They're living on $350,000 a year. They've set their standard of living, set their family expectations, and they have no money. They say they can't afford to hire somebody, and they start drowning in stuff they don't love. And then they don't love their business. And then it's like, where did I go wrong? And the first place you went wrong is setting your standard of living at your agency's revenue level. Set your standard of living at something reasonable as a business owner. You can always take excess profits for the year, and you can always pull cash out of your business as an owner. But don't set your personal expenses at such a level that doesn't allow you margin to hire people, to employ help. I think that's a basic business need. If you're living at a level of your revenue generation, you need to grab a hold of that. Look at your personal finances, look at what you're doing, look at spouse work or not. Understand what your household income need is within reason, and then set your pay somewhere in that range. Either a combination of salary plus a minimum monthly distribution, or a salary, CPA question, what's your tax situation look like? But if it's $350,000 a year, then it shouldn't reach that level. I'm going to use a number, 100. Set it at 100. Set it at 80. Set it at 120. Set it at some figure where you're like, okay, now what am I going to do with this excess? Now you can make a business decision. Do I want to keep working like I'm working, me and my executive assistant, or do I want to hire a CSR account manager to take a service load off of me? Licensed person who can do the things I don't love to do. Am I ready for that? You never are going to feel ready for that if you're living at the level of your gross agency revenue. because you're always going to say, I don't have enough money. You're always going to say that. And so you have to get a grip of that. You've got to have a come to Jesus meeting with yourself, with your family, with your spouse, and say, okay, this is where we are. We've either got to cut back and we got to do this and I got to grow the business and this is what we're doing. You're going to reap that reward. You're going to still get that reward in the end. It's still going to have value to the business. One other thing you mentioned, I don't love monthly review. I love quarterly. Now, early on, it may need to be monthly, but at some point, there's too much gyration on your monthly numbers and your monthly financials. Even to this day with us, which is a significant business at this point, I see the monthly stuff, but I don't react or really knee jerk with the monthly stuff. I really want to look at that on a quarterly basis, and the quarterly is going to kind of smooth out some of that gyration for me.
When I was learning about the business world, I was working for a radio station owner who was an accountant at heart. It was so interesting because I would go into work on Saturday and he would sit down with all of his monthly reports. And I swear it was the happiest that he ever was getting to do that. And so I learned this side of the business from doing that every month. So I find it really interesting that you do that quarterly, which goes to show that different people can do this in different ways and have a successful business. It's not about the spreadsheet. It's about the consistency. Figure out what works for you. Do you look at your personal checking account quarterly? Do you look at it monthly? Do you let things pile up and then put it in all at one time? Do you do it every day? Figure out what works for you and then create a checklist, create a system, write your system down to make sure that you do it the same way in whatever time period you're choosing to do it. It's not necessarily about time. It is about figuring out how to do it, being consistent, and not letting it get so backed up that it's overwhelming and then you just put it to the side and never touch it again.
I think you're going to pay for it somewhere. You're either going to pay for the procrastination of not being on top of it because you hate it and put it to the side. It's not fun. You would rather just sell another account. You're either going to pay for it by not knowing your business, or you're going to pay a CPA to keep you on track. You see this happen a lot where, oh, I can't afford to do that. I got to do it myself. And then you say you're going to do it yourself and then you don't do it. Well, which is better? To say, save that little bit of money and do it yourself and be terrible at it and not actually do it and not know what's going on in your business, or sacrificing something and having someone actually keep up with this information for you and have it in a consumable format for you, even if it is an executive assistant, virtual assistant. As business owners, one of the things we have to do is be really honest with ourselves, check our ego at the door and say, we just kind of suck at this part. And so get some help at the part that you really aren't great at. I haven't met a lot of successful business owners that couldn't do it. They're capable of doing it. They just don't want to do it, or they don't love to do it. So they put it to the side. It creates procrastination and it actually hurts our business, which then circles right back and hurts ourselves. If you're constantly putting stuff to the side, if you're constantly saying, I got to get a hold of this, I got to get on top of this, and you never get on top of this, get some help. Invest in that. Even when you think you can't afford it, it will shock you how quickly you grow out of that $1,000, that $500, that $2,000 a month that you're spending on either paying your CPA some fee, or paying a part-time bookkeeper, or paying an executive assistant, virtual assistant. All of those things, you're buying back that time. IA Blueprint founder Bo Pilgrim talks about that a lot. This is an area where salespeople as agency owners should be very focused on buying back their time.
There's a phrase we use in football: offense wins games and defense wins championships. Great producers drive revenue, but great accounting is what sustains it. And it's what's going to turn your agency from a job into an asset.
I think you hit on something really important. I don't think agency owners intentionally do this, especially if they move from employment, producer. I see this a lot with the producer employment. Even if you're a contractor working for another agency, you see this a lot when they move to agency owner. They don't actually grow into agency owner. They're working for someone else and now they're working for themselves, but it's just a job. It never transforms itself. I think that's a huge leap that's necessary that comes with this territory. And it can be so rewarding, like fulfilling. If you track things, if you understand truly what's going on in your business, it will help you eventually rise beyond the job. Giving yourself permission to become the agency owner doesn't necessarily mean that you only work 2 hours a day and you golf, hunt, or fish. What it does mean is that you give yourself permission to understand that you have to think different. Like, you're always working. You're always thinking about your business, even on the weekends, even at night. And it really challenges the work-life balance scenario. And you can't help it because you're creating something. To Tonya's point, you're building an asset. And what I see us do a lot of times is we move over here to this other ownership bucket, but we don't lose the job mindset. I think you have to give yourself permission to do that. Like, it's okay. I went through that. Sometimes I go back and forth, still struggle. I struggle sometimes leaving early, being gone, as crazy as that sounds, because I'm trying not to set the wrong example. But at the same time, I spent years, I spent a lot of time. You are spending a lot of energy and time, sweat equity time, that I would argue is 70, 80, 90 hours a week if you include your thinking time. Because when you move from job employee to business owner, what you're doing is you're changing to this build something for yourself, and you're doing the job part, but you're also moving to thinking work. It's not just do the work, go home, disconnect. It's do the work, go home, and think about it some more. That's what successful business owners do. I think it's good to be present with your family, but you're always going to be thinking about this thing you're creating, and it's natural. Don't beat yourself up about that. Understand that the work is going to look different. It's going to be a little more of a thinking work, which is going to circle right back around to why you need to know more about your financial situation. Why is the financial element of your business so vital? It's because you got to understand the next move. Can you afford the next move? Do you need to wait a little longer? Why are we talking about this? It's so that you can get discernment for the next step and for the next decision. We make bad decisions when we don't have good information.
This was not a glamorous, fun topic today, but one that is so incredibly critical to your business. If you did not enjoy this podcast, you should probably go back and listen to it again.
I agree. It's always the topics that are like, oh, that's going to be boring. And then you're like, this is really important. This is what it's really about. It's not how to generate more leads or how to sell or how to grow your revenue. It's like, what is the financial health of your business? And do you even know how to even understand the financial health of your business? And then you got to back up and set that up. Get your pencil and paper out and go to work.
Most universities in your area will do a 6-week class on this in their community education. You can take classes online. Of course, YouTube has a plethora of information on how to do this. I'm not fantastic at sitting down and watching those things on YouTube in my spare time. I would rather do something else. But if I have paid for attending a specific class, then I am much better at doing that out of my comfort space. It really puts me in a better spot for learning. So just an idea. Shane, where would you suggest people go for learning more about this?
Another opportunity as well is highly recommend, there's some really cool learning apps out there. Khan Academy is free. I actually look at that quite a bit. Khan Academy app. Don't know anything about the background of it, but I do know that like there's a whole lot of stuff on economy, economics, capital markets. There's basic profit and loss stuff. AI, ChatGPT, your favorite AI tool will absolutely blow your mind at what kind of information it can provide you if you just ask it. I love the community college idea. I love the local classes. I know we have some stuff here connected with small business development. They do free stuff all the time. It's a great place to figure things out. Your local agent association is also a good place in terms of things like that. If you're a part of an agency network like the Integra Partner Network, then obviously you understand that there is help within that segment of agent relationships as well.
I'm going to leave us today with this quote from Cal Ripken Jr. Perseverance is the hard work you do after you get tired of doing the hard work you already did.
Attitude's a choice. Make a great one.
Bye, y'all.
At the Integra Partner Network, we understand that carrier access is the key to your agency's success. That's why Integra offers direct access to top-rated personal and commercial carriers, ensuring your agency thrives in today's challenging market. And with our comprehensive resources, profit sharing and bonus opportunities, technology and peer support, all while you retain 100% of your book with no penalties to exit. Integra is ready to empower you and your agency to find sustained growth. Find your way to Integra. Visit IntegraPartnerNetwork.com today. That's IntegraPartnerNetwork.com.